tell me something I don't know.
Everybody tells me that it's so hard to make it, it's so hard to break it.
Hey guys! Okay, so to start off with, I'm going to apologize for the delay in this video. My son was here for this summer for like 3 weeks or whatever, and so I got kind of sidetracked and didn't really upload like I had intended to. So back to business. We'll be uploading every Friday these videos to sort of help you with the business aspect of your salon or spa or whatever, you know, even if you're just renting a chair. There are 4 key reports that we're going to talk about. And the first one of those is going to be what's known as either an income statement or a profit and loss statement. This is basically just the document that tells you exactly how much money you're making. It tells you where you're losing money and it tells you where you're making money. It is set up from your balance sheet. Now, your balance sheet is really, really important because your balance sheet has all of the categories listed that are all of your revenue sources and all of your expenses. Now, I don't feel like I need to go into great detail. I think that everybody knows that, you know, revenue streams are ways that you make money. In a salon and spa environment, there are multiple ways that revenue are made. Now, they're probably not being listed properly. You're probably not, you know, if you just have on your balance sheet, or, you know, if your records are just indicating this is how much money I made, you need to break it down a little bit further. How much money are you making? You have a revenue stream of retail items, products that you're selling, whether you're selling professional items or whether you're selling just retail items. You need to have a category for revenues from retail items. If you have booth renters, then you want to have that as a separate revenue stream. And then you want to have the revenue stream of what your salon is making in services. So if you are someone who has a booth renter situation, you have a, you know, especially when you are set up, you know, some of my clients that I deal with on a day-to-day basis, they have booth renters that pay them rent every month, but they also get a certain percentage of the services that are performed by that booth renter. And then they have retail sales, and they pay a commission to their booth renter for those retail sales, but they make the revenue off of them. You have to keep that relationship right there. You're going to want to keep it very specific. You're going to want to keep it very well divided, because you need to know if that's actually a profitable situation for you, especially on the retail side of things. If you've got a $25 bottle of shampoo that you're selling, and that bottle of shampoo costs you $9, and then you're paying, let's just, for the sake of being easy, let's say a 1% commission, then you have to figure your profit margin on that one bottle of shampoo is really only about $10. So you're making $10 for every bottle of shampoo that you sell. It's not a bad profit margin, but you need to make sure if you have other items that already have a lower, so like some of your, like Redken's diamond oil, that's like 15, 20 bucks, let's say, and you sell it for like 30 bucks, your initial profit margin is only like $10. So then you're paying commission to your booth renter. So your profit margin on that is significantly less. That's why you want to make sure that your revenue streams are divided out on your balance sheet, because when you look at your retail, you're going to be able to specifically, when you start listing expenses in your inventory, so you want to keep a clear inventory of what you're ordering, how many you have on the shelf, how quickly they're moving off the shelf, what the sales of those items are. So when you have your revenue stream dedicated solely to your retail sales, then you have your expenses that are dedicated solely to your retail sales. And that will give you a very clear picture of which products you're actually making money on. Which products, not just which products sell the most. I mean, you can take a glance at your shelf and say, this stuff flies off the shelf. But if you've got products flying off the shelf, but you're only making $2 every time they fly off the shelf, you don't have a lot of profit from that. Versus, you know, maybe you've got a bottle of shampoo that doesn't sell as much, but if you have to sell, you know, if you've got something that you're making a $10 profit for every one that's sold, and something you're making a $2 profit for every one that's sold, you have to sell 5 of these to make the same amount of money as one of these. So it gives you a very clear picture of where your money's going, what you're actually making money on, not just what's selling best. But sometimes your best seller is not the thing you make the most amount of money on. So this gives you a very clear and concise way to do that. All of that is captured on your balance sheet. Your balance sheet is basically where you set up the categories. It gives you a very clear picture of which services you're getting the most requests for, which stylists you're getting the most requests for. Like, your balance sheet can be as detailed or as vague as you want it to be. But the more detailed and specific your balance sheet, the better picture you're going to get of how your business is running. You're going to know exactly which stylist is making you the most amount of money, which services are making you the most amount of money, which products are making you the most amount of money. And it's going to give you a very clear picture, and you're going to be able to tell that. That balance sheet works itself out, and it presents the profit and loss statement or the income statement. And I reconcile that income statement once a month. At the end of every month, you want to pull that income statement, because you're going to be able to see, what did I do this month compared to what did I do last month? Where am I losing money? How can I fix that going into the next month? It's also going to give you a really clear idea of what your busy months are, what your slow months are, and allow you to plan for that. If you know July and August and June, like the summer months, are really slow for most salons. People are just on vacation. They just don't have all the special events. Like, those summer months are really rough for most salons. If your salon doesn't experience that, then you are in the minority and consider yourself very lucky, because most salons, June, July, August are pretty slow. Towards the end of August, when school starts to start back up, things start to pick back up. But those summer months are rough. And the best way to handle that is to prepare for those slow months, which means that you're going to take money and set it aside so you have a savings to pull through. The other thing is, in those months is when you want to reduce inventory. You don't want to buy the things that you're not making a lot of money off of, or the things that you're not selling very well. And unfortunately, when a salesperson comes in and they've got all these specials and they're talking to you, and you've got color that's processing, and you need to be behind the chair, and you this and that and the third, it's a very hectic situation, and your salespeople sometimes will sell you things that you don't need. And you don't want to just duplicate an order because it has most of the stuff that you need. So doing your balance sheet every month is, your profit and loss statement, income statement every month is very important. And we're going to go into detail in following videos. We're going to go into a lot more detail about how to do that. There are some great softwares out there to help you do that. QuickBooks is an amazing software. We are actually going to discuss how to use QuickBooks and use it properly. Because the thing about QuickBooks is that QuickBooks is something, it's very easy to make a mistake. It's very difficult to correct that mistake. QuickBooks only works to the best of its ability if you have an understanding of basic bookkeeping principles. If you don't know how to set up your balance sheet, because QuickBooks is only going to use whatever information you set it up. So we're going to go through how to set it up, but if you're still not comfortable with that, then I recommend you take it to a bookkeeper. You can find a bookkeeper fairly easily. I mean, you can go to like Fiverr or some other little websites and find bookkeepers that are willing to do things for maybe $15, $20. It should not take a bookkeeper more than 3 hours to set up your balance sheet. Once your balance sheet is set up and set up properly, then after that, it's just a plug and play scenario. You're just plugging in information, and QuickBooks will distribute it throughout your balance sheet where it's supposed to be. And then you can auto-generate at the end of every month all of the reports that you need. In addition to your profit and loss statement and your income statement, the next report that's going to be very important for you is going to be your cash flow statement. The cash flow statement is really important because it tells you how much cash you actually have. Your profit and loss statement is not only going to it's going to take in consideration your revenue, it's going to take into consideration your expenses, it's also going to take into consideration all of your assets, because all of your assets, you know, if you own them, if you don't own them, if you're in a building, if you've got your shampoo bowls, everything else, all of those assets and your inventory, everything else is all contributed to your overall profitability. However, if you've got $1,500 in revenue and you've got $20,000 worth of assets, your overall profitability could be really high. But the fact of the matter is, you got $20,000 of your overall profitability that is not what is known in the finance world as liquid, meaning that you can spend it. You can't go and buy hair color with a shampoo bowl. This is not, we're not living in those days. It's not a trade society. So you may have $20,000 worth of assets. You can't take those assets down to the store and buy your products with them. So you need to know what your liquid profitability is. How much cash do you have available to you? Now, in the finance world, the term cash can be somewhat misleading because it's not actually talking about physical cash in your cash register. It could be credit cards. It could be, it could be available credit. It could be cash. It could be what's in your bank account. All it really means when it's talking about cash is your liquidity, meaning what do you have that you can actually spend right now today without having to sell something, without having to refinance it or take out a mortgage or anything like that. What do you have available to you that you can actually spend right now today? And how much of that are you actually spending? So that's where your cash flow statements come in really, really, really handy, because where your P&L statement gives you an idea of what your total profitability is. Are you profitable at all? Then your cash flow statement gives you an idea of how much money do I have to spend? How much do I actually have that's liquid? And that's a very important thing to keep in mind, because that helps you regulate not only your spending in your business life, but it regulates your spending in your personal life as well. Okay. The next report that we oftentimes deal with is going to be if you have employees or anything like that, you're going to have your salaries, your paychecks, your payroll, what that's costing you, how that's coming out of your overall profitability, and your taxes. Because if you have payroll, you have to pay Medicare taxes, Medicaid taxes, all of that stuff. And QuickBooks is great with that too, because when you input hourly time or whatever time it is for your employees to generate paychecks out of QuickBooks, it automatically tells you how much you need to pay and how much they're taking out of that check. So QuickBooks has a lot of really good instruments to help you keep on track of all of that stuff, because your taxes, as we all know, are very important. You've got sales tax, you've got, payroll taxes, things of that nature. Again, I would not recommend that you do your own taxes. Here's the thing. I understand that accountants, tax professionals, they cost a lot of money. So when you're looking for them, you need to find one that's hourly. Don't get one that has a flat rate. Don't get one that has a retainer or anything like that. Get someone that has an hourly fee and have a very clear written contract with this person. And I don't care if this person's your sister. I don't care if it's your mama. I don't care if it's your best friend from high school. Have a very specific written contract that says, this is what the hourly rate is. This is what I'm going to pay you for. And you are going to provide me very detailed descriptions of the time that you're using. How many hours? If you're charging me for 3 hours, what did you do for those 3 hours? If you're charging me for an extra hour, what did you do for that hour? You know, all of that needs to be very clear, and you need to have that. And what I can tell you is, by doing your own reports every single month, and by having a very good balance sheet, by having a very clear profit and loss statement, by having all of those things already input, then it's very easy for someone like me that's a bookkeeper or an accountant. All I have to do is download your QuickBooks file or your Excel file or whatever it is that you're using to keep this documentation. I just have to download it, put it on my computer, and it's a plug and play for me. I just have to input. I have to make sure that taxes are being paid. I have to make sure that this was done properly. Get your signature, bada bing, bada boom, it's done. So it reduces the amount of time that an accountant or a bookkeeper is going to have to spend. So now you are still, even though you can't avoid incurring that expense, you can greatly reduce that expense by having all of this stuff ahead of time. Not to mention, it's going to eliminate a lot of stress for you. You're going to eliminate those moments of, my salon is busy, my retail's selling, but I'm not making any money. That's the most frustrating feeling in the world. I'm constantly working. My booth renters are constantly working. My retail product is flying off the shelves, and I'm still not making any money. What am I doing wrong? What more can I do? And usually the answer to that question for hairdressers is, hairstylists, you guys just work more. And it's not always about working more. It's about being more efficient with the amount of work that you do. And one of the best ways to do that is to have those reports, because you can very clearly see, sure, my retail is selling like crazy, but my profit margin is minimal. And it gives you a really good idea of how to sort of change with the industry, because the fact of the matter is, we all know it. We all hate it. We don't know how to fight it. But the fact of the matter is, retail is dying inside the salons. And if your salon is experiencing a decrease in overall retail sales, let me tell you, as someone who works for a supplier, for a wholesale distributor, the largest one in the world, I will tell you, you're not alone. That is something that salons across the country are experiencing. People just don't go to the salons to buy retail products anymore. It's partially because of Ulta. It's because of, you have places like Sally, you have places like Ulta, you have places like Sephora, not to mention the Amazon markets and everything else where people can get their hands on stuff. And it's just not convenient for them to go into the salon in between colors to get their retail products. So your retail can no longer be the area that you make the most amount of money. And that's why you're seeing so many salons doing all of these major color services, the rainbow color, the balayage color, all of the different color services, all of the different texture services. They are going into this, they're adding more and more things like estheticians and makeup artists and things that give an overall full day of beauty feel. And the reason for that is because no matter where they can go to buy retail products, they cannot buy an experience of sitting in your chair and having a professional cut your hair, color your hair, style your hair. The feeling that they get when they leave that salon, they can't buy anywhere else. And that's the thing that you need to be able to focus on. And the fact of the matter is, you may not get them. Listen, they may not come in until they have another service, right? They may, if they don't need to come back for 6 weeks, they may not come back for 6 weeks. And if they run out of shampoo in the meantime, they may go buy it somewhere else. They may go to Ulta, they may go to Sephora. But the key thing is, while they're there, sell them the product that you're using. While they're there, have them buy something. And if that's the only sale you're going to get from them until 3 months later when they come in to have their roots touched up, then make sure that the products that you're selling them are products you're making a good profit margin on. And the best way to do that is to have all of these reports. I know it seems like a lot of paperwork. I know that for someone who is extremely creative, some people are just not good at numbers. You know, my poor little sister was a genius hairdresser. She was one of the greatest hairstylists I've ever seen, and she just would amaze me at the things that she would turn out of her chair. But when it came to paperwork, when it came to numbers, things like that, that was not her strong suit. She had no use for it. Oddly enough, she could tell you exactly what level developer you needed, exactly what level you needed to raise the hair to be able to deposit that color. Any of those types of numbers, she was on it all day, every day. But when it came to balancing a checkbook, keeping up with profits, keeping up with expenses, keeping up with receipts, throwing out all of these numbers, bills, things like that, she wasn't here for any of that. Like, she was not here for any of that. But it's so very important. And even though it just seems like such a drag and everything else, there are ways to do it and do it very easily. Like I said, you can get it set up so it's just a plug and play, and it's just about you inputting receipts. And if you've got a receptionist there that answers the phones, make her responsible for entering the receipts, you know, or him or whoever. You know, if you've got somebody that's sitting there and their job is to be a receptionist, you know, change the title to administrative assistant. They're still, you know, gonna change the title to administrative assistant, have them answer the phones, have them book appointments, and have them enter these receipts into your system that you're using to keep up with your bills and stuff. Because the great thing about it is, it's going to make this, it's going to put you in a position where this can be fun for you again, where you don't have to have this constant robbing Peter to pay Paul, and I don't know where my money's going, and I work all the time and I never make any money, and alleviate all of that. Because like I said in my previous video, people open salons because they love doing hair. They love that feeling that they give people. They love to play with hair. They love the beauty industry. Like, they love that. That's why they open salons. Nobody opens a salon because they're a business person. They don't. Because anybody that's actually a business person, a salon would be the last thing that they would open. They might buy one that's already established, but they wouldn't open one. Salons are hard to run. So people that open salons, it's because they like doing hair. It's because they love being a hairstylist. It's because they love whatever their, you know, chosen beauty profession is. And the sad part about it is that running that salon oftentimes becomes such a burden that they don't even enjoy their profession anymore. And I don't want to see anybody get to that point. I watched my little sister get to that point, and I don't want to see anybody else get there. I don't want to see people lose the passion that they have for something they love because of something that, you know, gets to be too overwhelming, and it doesn't have to be. Okay? All right, guys. So those are your 4 major reports. Those are the things that you need. Next session, we're going to go into a lot more detail. We're going to start with QuickBooks. The reason we're going to start with QuickBooks, guys, is because, quite honestly, it's just the easiest way to do things. It's an amazing system. It's really, really a good thing for any business owner, and especially salons. So we're going to start with that, and we're going to have a series of videos on how to set that up and everything else. After we do QuickBooks, we can move into other accounting softwares, or we can move into, and eventually we'll get to where you're just keeping it on spreadsheets. I will tell you now, I don't recommend that unless you have a very heavy accounting or bookkeeping knowledge base, because keeping it on spreadsheets means that you and you alone have to know exactly where everything needs to be coded. You have to know exactly what your balance sheet needs to look like. You have to know what those formulas are. You have to know all of this stuff. All of the stuff that these accounting softwares do for you automatically, you have to do for yourself. So I don't typically recommend using spreadsheets to manually do these reports. Okay? All right, guys, have a great week. I will see you again here on Friday for another video for this installment. May have a video for something totally unrelated in a different playlist some other time during the week, but the next Business of Beauty will be next Friday, maybe Saturday morning. All right, guys, have a great day. Be blessed. Minimal stress.